To order the January meeting of the Finance Committee. I'm Sammy Chu, standing in for our Chair Neil Zuckerman. Do we have any public speakers?
We have two public speakers today. The first public speaker is Jason Anthony, who will be followed by Maddie Bucky's Highland remotely.
Thank you, David. Hi, Sammy. Hey, Kevin. Happy New Year. Good afternoon, everyone. Jason Anthony, the Transfer Guru, on this wonderful 2025. Let's start off with something that Congresswoman Nydia Velasquez said on Friday during a press conference during an elevator opening at Woodhaven Boulevard. That is that we should spend every single dollar of the federal funding that was received during the Biden-Harris administration. And that is absolutely correct, because we are entering into a certain territory, I should say, because this incoming administration, what are they going to do in this? I've been predicting this for months now, is that all the federal funds, they are going to strip it, and they are going to delegate those funds to the state. And what are they going to do? This doesn't apply to New York only. They're going to do it to all states, and then the states have to deal with the burden. So what I'm going to say is, Kevin and Jay, we have to be resilient going forward. And you guys have 100% my support. So let's be New York tough.
Thank you. Our second final speaker is Maddie Bucky's Highland remotely.
David, can you hear me?
Yes, we can.
Okay, perfect. If you can hear me, that's great. Good afternoon, everybody. My name is Maddie Bucky's Highland, and today I'm going to speak about finances. So the first topic I do want to speak about is, with congested pricing to affect, we'll have to see how our finances do. With the budget now being in processes, and with the joint session of the Senate and the Assembly convening under that of the Finance Chair Liz Kruger and Ways and Means Chair Gary Pretlow. So we'll have to see what happens. But with congested pricing, it has gone a lot better, these roads, at my opinion. But it has been considered, even our neighbors in the Hudson, for Mayor of Jersey City and gubernatorial candidate Stephen Fulop, to help fund New Jersey Transit, which has a new president CEO, Chris Kalori. So I'm interested to see how the finances will do with the congested pricing in effect. So with that being said, everybody, God bless you all, and thank you very much, David.
Thank you. That concludes the public speaking session.
Thank you to all our speakers today, and thank you, David. Next, we have approval of the December 16th committee meeting minutes. Are there any corrections? Seeing none, may I please have a motion? Motion is, do I have a second? Seconded by Mr. Herbst. All in favor? Any abstentions? Nays? Motion passes. Minutes approved. Next item is the monthly financial performance report. David, please take us through the budget portion.
Thank you. Operating results are preliminary and will be revised as financial results continue to be reviewed and audited. Compared with the November forecast, year-to-date December 2024 preliminary results were favorable by $222 million, with favorable results for farebox revenue, B&T toll revenue, operating subsidies, investment income, and debt service expenses, with a minor shortfall for operating expenses. Operating revenues on a year-to-date basis were $60 million favorable, Passenger revenues were $16 million favorable, while toll revenue was $8 million favorable. Subway farebox revenue was $13 million favorable, and bus farebox revenue was $1 million favorable year-to-date. Metro North was $6 million favorable, while the Long Island Railroad was $5 million unfavorable. As a reminder, the November forecast incorporated the fare loss provision for offsetting unfavorable subway and bus revenue results that had been below the line in the July plan into the baseline forecast. Further, the post-pandemic McKinsey recovery projections had become less aligned with actual ridership results and trends, and the forecasting methodology for the November plan reverted to the approach taken prior to the pandemic, which is based on changes in regional economic conditions. As a result, the graphs in the book no longer include the McKinsey projection band and instead show the monthly forecast using the updated forecast methodology. Operating subsidies year-to-date were $141 million favorable. Excluding investment income, subsidies directed to the operating budget were favorable by $135 million, primarily driven by favorable results for the real estate transaction taxes, which are the urban tax and the MRT, which were a combined $40 million favorable, and the payroll mobility tax, which was $96 million favorable. Capital subsidies were $5 million unfavorable year-to-date. Operating expenses were favorable by $10 million year-to-date, with labor expenses $194 million favorable and non-labor expenses $217 million unfavorable. For labor expenses, savings was primarily in fringe benefits, pension expense, and overhead reimbursement. For non-labor expenses, claims expense were higher due to increases in the Excess Loss Fund Program, FMTAC, and an actuarial adjustment in New York City Transit, offset by favorable results for professional service contracts, maintenance and other operating contracts, and fuel and electric power expenses. Overtime year-to-date across the MTA was $2 million unfavorable, while payroll was $14 million unfavorable. Payroll was unfavorable due to higher than anticipated IT salaries, retroactive wage payments, and retiree payouts, with savings from vacancies offsetting much of the unfavorable spend. Debt service expense was $31 million favorable year-to-date, mainly due to higher investment income generated by debt service funds, and further details can be found in the performance report.
Thank you, David. Kevin, you had something to add?
Sure. I think what David said is pretty straightforward. We closed out 2024 really on track of when we presented in November and you approved the budget in December. So no big surprises on the ridership and projected revenues, right on with our kind of new approach to forecasting that we're carrying forward and moving away from McKinsey. We actually would have been, when you look at the expense side, our controllable, we were better than the revised November plan on labor, but it was given all back by, we talk about higher actuarial claims. What's happened is we've had to take pretty significant expense reserves because of, and actual cash payments because of some of these large settlements for liabilities, that I don't want to get too philosophical about it, but we're having a lot of juries in the city giving really large awards out to people injured, and I won't get into the cases, but under the false pretense that, well, MTA is a big deep pocket and we can just afford to pay out $50 to $100 million claims, which really where that money's coming from is our riders who are using their hard-earned money every day to pay our fares. So it's it's in our financials we've had to reflect these increased costs, and obviously it's on us to continue to work on safety and so forth. But some of these we talk about tort reform and everything else, and it's viewed as theoretical, but it actually has really significant costs and had a couple $100 million additional impact to us last year. On the operating subsidies and dedicated taxes, came in kind of really strong, as David mentioned. The real estate related taxes, better than we had forecast, remember, we brought the forecast way down, so it's not like the real estate market's doing great. It's just that we put really conservative estimates in, and, we're expecting some continued growth in that in 2025. But, again, it looked like interest rates were headed down. The real estate, market was going to heat up again, and that's, a little bit more questionable. And the payroll tax continues to do well as jobs in the city and the region really drive that source of revenue. So anyway, with that, I'll
Great.
pass it on.
Any questions on the performance report? Seeing none, we'll move to Olga for finance.
Thank you, Chair. Good afternoon, everyone. This month's capital financing section of the financial performance report includes details of 2 transactions that we closed since our last meeting, as well as a description of the bond anticipation note sale we plan to execute next month. As far as the transactions we closed, one is a $186 million bond anticipation notes that were competitively bid and closed in December 2024. The other is the inaugural issuance of $1.6 billion of bonds issued under our newest capital lockbox credit, which is secured by real estate transfer tax revenues. Thanks to hard work of the MTA finance team, our financial advisors, and the underwriter syndicate, as well as favorable market conditions, this bond deal was very well received by the market. We were able to achieve all our pricing targets, as well as increase the size of the deal by $300 million. As far as upcoming transactions, next month we are planning to issue $500 million of bond anticipation notes to provide interim funding for projects in the 2020 to 2024 program that will be ultimately financed with revenues from congestion relief zone tolling program. I'm happy to address any questions.
Any questions, comments?
Yeah, I just want to add, I want to thank Olga and her team on, she mentioned the $1.6 billion real estate transfer tax, also known as the mansion tax. And, just to put it in perspective, when we had the 20 to 24 capital program approved, the state said, okay, here's some new revenues in the lockbox, setting, the congestion pricing, we have to get $15 billion, but here's a few new revenues, go figure out how to generate $10 billion in capital. And so, some of the sales tax pieces are easy to borrow against, but something like a mansion tax, which is a new tax in the state, pretty, dependent on the real estate market and the high-end real estate market. And Olga and her team figured out how to, look at all the data, put together credit, and go out and, get investors to be confident to lend us money against that revenue stream. So might sound like a lot of sausage making in the background, but there's actually a lot that goes into converting revenues that are pledged into a lockbox into actual money that can be used for projects. So good work to the team.
All done. Andrew?
Yeah. At what point, maybe a lot more has to be collected, but at what point can you get bonds issued against congestion pricing revenues?
Well, what we've said is that we're, in terms of bonds that would be secured and payable solely from congestion pricing revenues, we want to collect data for about a year to be able to go out and then build the track record. Now, that said, we do have debt outstanding for congestion pricing. So we've issued a little over $400 million, I think, for the infrastructure costs in the form of short-term notes that is to be paid from eventual congestion pricing bonds. In the meantime, Triborough's had to guarantee it with all our revenues, and we'll be in the market, I think, next week for another $500 million of short-term notes to actually kickstart and spend on the congestion pricing projects. But again, it's kind of in a short-term note format that Triborough guarantees the other revenues, but clearly has been described to the market as these are the borrowings are going to be taken out with congestion pricing. So bottom line, we're generating proceeds both for the infrastructure that we need to generate and for the projects. It's just when we actually get the kind of pure security to investors secured solely by congestion pricing, we'll let it age.
I'm sure investors would like to wait and see what's going to happen with all of the lawsuits and the new president and all of that, so.
Yeah, I mean, investors, the more uncertainty they have, the higher interest rate they charge. So we need to find that time where, the uncertainty is at a very good spot.
Any other questions? The next item seeks approval for the 2025 committee work plan. Before requesting a vote, do any members have any questions or comments? Seeing none, I'll ask for a motion. Motion from Hayda, second. Second by Mark. All in favor? Any abstentions or objections? Motion passes. Next, Lizette, headquarters and all agency procurements.
There are two MTA headquarters administrative items this month for Finance Committee approval and the estimated amount of $16.4 million. And these actions are found in the Finance Committee book. The first item is a modification to add funding to a competitively negotiated contract awarded to Metropolitan Life Insurance Company to continue life, accidental death, and dismemberment, long-term disability and short-term disability benefits for non-represented employees and certain represented and retired employees in the amount of $14.1 million. In September 2020, the board approved a 5-year contract for a projected amount of $55 million that is effective until December 31st, 2025. Additional funding is required due to a number of reasons, including the conversion of the Bridges and Tunnel population from a self-insured to fully insured plans, including a reserved buyout transaction for open long-term disability claims, increased enrollment, and a contractual adjustment for the long-term disability premiums. MTA HQ procurement will have a new contract in place at the end of the current contract. The second item is a request for an 8-month extension through October 28, 2025, of a competitively negotiated estimated quantity contract for as-needed purchases of safety and work shoes for New York City Transit and MTA Bus Company, awarded to Safeguard Safety Shoe Company. Increased funding in the amount of $2.25 million is also requested. This contract specifically supports the transit and MTA bus and provides footwear required under collective bargaining agreements. MTA HQ procurement has released a new solicitation to replace this contract. The proposed 8-month extension will provide sufficient time to complete the solicitation and award of a new contract, and also allow for the transition to a new vendor should the incumbent not be awarded the contract. Any questions? Happy to answer any questions.
Any questions? Not even on the shoes? I'll take a motion. Motion by Mark. Any second? Second by Mr. Jones. All in favor? Any objections or abstentions? Motion passes. Thank you, Lizette. Next, information items. The next item is the third quarter financial statements. Mr. McGovern, MTA Controller is here. Are there any questions? Seeing no questions. And there are no agency information procurement items this month. Monthly consolidated reports can be found in the committee book. David Florio is up with the real estate agenda.
Thank you, Mr. Chairman. Real estate has 1 administrative and 3 transactional action items for consideration and approval. The administrative action item is for MTA New York City Transit and is an update on the acquisition of temporary and permanent easements from New York City Parks in support of accessibility improvements at Broadway Junction Station in Brooklyn. The first transactional action item is for MTA Metro North Railroad and is a lease agreement with Carlo Innovation for a restaurant at the Spring Valley Station. The final two items are for MTA Long Island Railroad and include a license agreement with 450 Acquisition Company for the use of land for parking located adjacent to a business at 450 Endo Boulevard in Garden City. And also there's a grant of a permanent easement to the Long Island Power Authority in support of the Yaphank Station relocation in Brookhaven. There are, in addition, 4 information items. The first is a short-term parking permit between MTA Metro North Railroad and the town of Cortland for use of parking lots at the Cortland Station for a public event. The second is a license between MTA Bridges and Tunnels and Pace University for a retail unit on the ground floor of the Battery parking garage. And the third is Long Island Railroad acquisition of property from Rose Breslin Associates for the Yaphank Station relocation project. And the final is the report on agreements entered into directly by the Real Estate Department pursuant to board policy. Happy to answer any questions about any of the foregoing.
Any questions for David on real estate? Thank you, David. Can I have a motion? Motion by Mark, second by Mr. Jones. All in favor? Any objections or abstentions? Motion passes. Now I'm going to hand it over to Jay for some updates I think everyone's anticipating.
I'm sure everyone is eager to understand the impact of revenue from congestion pricing. Just wanted to provide that we plan at a next committee meeting to provide the Finance Committee with an update of the revenue impact from congestion pricing as we close our January books in early February. So you'll see that as part of revenue in the committee performance reports and as well as the B&T financial. So it'll be an estimate of what we've seen as revenue collections and some estimates of things, known components of the revenue.
Sorry, Jay. Will you update the committee every month, every quarter, every
Sure.
whenever we ask?
It'll be part of every month's financials. As you see revenue today in the operating and subsidies and the agency revenues from farebox revenue collection, you'll see an estimated number for congestion pricing as well.
Great. Perfect. Thank you.
Thank you, Jay. Hold tight for the actual numbers. Don't listen to what you see on Instagram Reels and TikTok. That's just parody. With that, I'll take a motion. Am I in trouble because I said TikTok? With that, I'll take a motion to adjourn from Hader, seconded by Mr. Jones. All in favor? Aye.